Welcome back to the Rhodes to Wealth podcast. I'm your host, Josh Rhodes. Today's guest is one that I've been tracking and excited about and for a really, really long time. AJ Bruno and I were cut what feels like from the same cloth in that we both really enjoy the grind. I think here in the episode, he refers to himself as hungry, which if you've listened to anything that I've talked about in my past episodes, that is something that I really endure, right? And I really enjoy to sort of dig into a bit. Right out of college, AJ graduates from Penn State, goes on to, I mentioned earlier, a sales role where he found a lot of success. This is a high intensity, full cycle sales role. It goes on to get in a management level position in just a few years. And so just a couple years out of college, he's over a team and decides this isn't enough and branches off to do his own thing. I'm not going to steal any of his thunder. He does. I mean, he's able to bet big on himself. He makes a few sacrifices, he and his family, and it really pays off. A few years later, this is something like 4 or 5 years into that initial company, which is called TrendKite. He has pretty significant exit where TrendKite was actually acquired for $225 million. During that exit, AJ had already come up with a second idea or another company he wanted to start, pulled some of the founding members, some of his network together, and started a second company that he's currently working under. He's the co-founder and CEO of QuotaPath. And I'm really, really excited and honored to pick his brain today around what does it take to start a company, right? Some of the exciting questions around what does an exit look like? Do you save that money? Do you spend that money? Do you now invest your own ventures? I've got a ton of questions that I've prepared that I want to bounce off of him. As always, I appreciate you guys tuning in. Let's jump right to it.
It's the road to the wealth. I do it for health. For my kids and my spouse. Financially sound. You the bad dad.
AJ, first and foremost, man, I really appreciate you getting on with me, being flexible. I think we had this scheduled like 6 times on the calendars. So I appreciate your flexibility, and I'm glad we were able to connect. I really, really appreciate the opportunity.
Yeah, I think it was my fault just as much. It was the end of the year, a lot going on, but I'm glad we were able to finally catch up and excited for the conversation. Thanks for having me.
Yeah, same. Man, I typically like to start these off with just a broad stroke of who you are and what you have going on. You know, offline, we talked about how we had really the same start and career path in that you started out in the inside sales, cold calling sort of role, responsibility. So maybe we start there, kind of jog us up through QuotaPath, and then I'm going to circle back and do some unpacking.
I think the story of the origins of me getting into sales actually even starts before that. I was an undergrad at Penn State, an economics major. I was a little unsure of what direction or career trajectory I wanted to head. I knew at some point in the future I wanted to own a business. And near the end of my senior year, I was thinking about some of my options. I was an okay student. I think it was a 3.3 student and maybe in my major. Like that was the way I viewed it. But I did have options. And I was talking with my uncle who was very successful in business. He actually gave really great advice. He was like, look, if you ever want to actually own a business, you got to start where all the deals happen. You got to start in sales. And I didn't even think of anything of it. This was mid 2000 or 2007, and nothing in my major talked about sales. It was obviously still looked at from a reputation standpoint as a little bit of a car dealership sell, and unfortunately had that name around it. So I thought about that. I looked into it and I said, you know what? If I'm going to do something in sales, I might as well do it in tech sales, something I enjoy. And I was living in Philadelphia at the time at my parents' house. So I found my first job out of college with a company called Meltwater. And Meltwater, I didn't know it. It was the best experience I possibly could have had. I didn't know that, but it was a experience where SDRs, lead gen wasn't really a thing. And so I got an opportunity to jump right into a closing role immediately at 22 years old. And it was a 1,000-person company doing about 100 million in revenue, very new business focus and growth focus. Had 52 offices around the globe, and Philadelphia was one of them. So I joined a smaller office, maybe 7 or 8 people, and started an individual contributor. And I just worked my ass off for the first 3 months and saw success. I remember clearly my now wife, was just graduating college. She was a year behind me, and I wanted to get an engagement ring. And I remember learning about commission, and halfway through my ramp, there was actually a spiff for 50%. And that focused and motivated me more than anything. And I went and bought a modest engagement ring for a 22-year-old first-time salesperson. Those 3 months definitely fueled me on the hard work. However, I definitely hit like a brick wall. Unfortunately, I think on month 5 and 6, I zeroed out and was put on a performance plan to the point where I actually quit. I quit in May of 2008. I remember it very vividly. I walked in and told my managing director that I didn't think sales was for me. I think it was a good fit. And he said, why don't you come to summer kickoff? You'll get to see the other offices in the US. Let's at least see, if you can buy in a little bit more culturally. And I did. And I turned that around and I just like rededicated, did 15 demos when everyone was doing 8 demos a week, made 200 cold calls if I had to a day. I mean, I didn't think about what that quality of that cold call, because it was just a very much like kind of a transactional type of sell. So I probably could have done more efficient selling, but I didn't understand that. And eventually became the top seller out of probably 500, 600 reps by the end of the year. And I wasn't a fantastic seller. I just slowly but surely climbed and had a couple months of really strong success before being promoted into a sales manager role. Ran a team successfully and then was the managing director at the ripe old age of 24 years old. That was a trip because it was a bigger office and we, like my own sales career, had basically churned out a lot of folks. Sales at that time was 1 in 3, maybe even 2 in 3. And so I had to rebuild the team and did that and found enough success where we were a top 10 office consistently. And then eventually got the opportunity to move over to San Diego and open an office there from scratch. So I did that and that took us to 2012. And so that was my 5-year stint in like a down and dirty sales, understanding all cold call sales methodology. And it was fantastic.
Yeah. I'm going to circle back because I do want to ask you a couple questions about that. But at what point, how long were you at Meltwater Group before you left and started your own gig?
4 years, 9 months. I remember my wife and I were expecting our first in the summer of 2012. She was born in February 2013. And we were thinking about moving back to the East Coast, thinking about being back to family. Unfortunately, the Philadelphia office, when I had moved out, someone else had taken over and it did not survive. They ended up closing that office. I didn't really have a lot of options with Meltwater. I mean, ultimately, I was not in the best mental capacity to stay with the company. I just was like over it in ways. It wasn't Meltwater's fault. It was completely internally driven. I had a managing director or an area director, I should say, that was fairly interesting in that he was a high performer himself. Our personalities clashed a little bit, but he did do something that was so important for me personally. And I didn't realize it at the time. I realized it immediately after, thankfully, which was he took all the managers to go see Tony Robbins' Unleash the Power Within, his conference. And in 2012, I really didn't know him outside of Shallow Hal, but those 4 days were transformational, life-changing. And I left there with a renewed purpose and focus on 1, building a company, but 2, I also had some financial milestones and markers. And one of those was to own an airplane. I know hearing that for the first time, it's like you wanted to buy an airplane like a jet. No, actually, I was a pilot when I was 16. My dad's a pilot. My mom's a flight attendant. I have 2 uncles that are pilots. And I've just been always around aviation. And I love that opportunity and the freedom that it brings. But planes cost a lot of money. And my wife and I were $70,000 in debt. I was 27 years old. We had college bills to pay. We had car bills. So everyone I told that afterwards was like, well, you better start saving now. And what they didn't understand is like, if I was going to do this correctly, I needed to create an asset, something that was much bigger than myself and much bigger than anything I had ever experienced. I had to have to learn and grow along the way, but I was going to do that by starting a company. And so like that was, I said in 3 years, that was the time frame that I put on for buying a plane. 3 years, I'm going to buy an airplane. And so that's how the genesis of TrendKite kind of kicked off, in that I knew I was going to start a company and I knew I was going to buy an airplane in 3 years.
Did you buy an airplane?
I did.
Yeah.
I also had twins along the way, and I always like to blame them for the 7 months of lag that I
did. Yeah, the happy surprise. So in the Meltwater Group role, were you B2B at that point? It sounds like you were dealing direct to businesses.
Yeah, it was direct cold call to close. About 26,000 clients. I found myself selling a lot more down market. I resonated really well with the nonprofits and the universities of the world. So where I couldn't quite grasp the enterprise complexity of the enterprise, where my peers could, they were selling 1 or 2 deals a month and hitting like 50K. But we just had bookings. We didn't have ARR. I'd have to sell 7 deals. And so, as I said, I was not very sales efficient. But I love talking to some of my customers and learning a lot about them. I've since learned the challenger sale and the relationship build not always go hand in hand, but I do think I learned really valuable lessons in getting to have genuine connections with some of my customers, something that I feel is lost a lot in today's sales world.
Yeah. And I mean, the fact that you weren't efficient, I don't think anybody'd blame you. You were in a prospecting to close role right out of college. I entered a sales role right out of college as well, but inside sales where I was just smiling and dialing and then passing that off to someone to close, right? Where I had the chance to at least get some ramp. During that process, I mean, you mentioned you went after it the first 3 months because you had a goal, right? You wanted to buy that ring. You did that. Here at the top of the call, you mentioned you always knew you wanted to own or start your own business. Your uncle told you that out of the gate. So that you sort of logged that back. As you were in this sales role and you're building commissions, were you saving for that side gig? Were you putting money towards retirement? Like what, as you had this disposable income and money you could play with, what were you doing with it?
No, I was not saving for the side gig. I pulled my entire 401k out. It was $1,000 and I took the 20% penalty on it. And I think I look back at that as a defining moment in the sense that it was kind of dumb, but it was also, and everyone was telling me it was dumb. Certainly my mom heard that a lot, and my grandmother, who I was close with, were not too pleased because I was about to have a kid. I get it. Health benefits, and no one wants to have to pay out of pocket for that stuff. It's $1,400 a month that I was paying for. But I think it was a whatever it takes. And you look at some of the traditional definitions of entrepreneurship, you kind of do it at any cost. I think there's calculated risks that you take. I knew that we had like an 8-month runway to it. And I just think that fueled me every single day. And I talked to as many people as I possibly could. And with TrendKite, we entered a business accelerator, and certainly Techstars and Y Combinator are very well known at this point. At the time, not as well known. There weren't as many, but they were starting to bubble up. We joined Dream Adventures and got our start in Austin, Texas. And we were working out of the Capital Factory in Austin, Texas, which is well known in Texas now. But that time it was one floor, and Josh Baer was on the floor, and you'd go up and just chat with him and talk to him. Josh Baer is the founder and managing director of the Capital Factory. So we had a lot of exposure really, really early to what started up with the startup scene, and certainly in Austin, which was this like fast-moving, high growth, and the city was changing overnight. Still is today, but like at that time was very tech and innovation focused on the changes. So we went down there. I left my wife and pregnant wife, who was 8 months pregnant with our child. She actually had it in February. We were down there January to March. So I flew back, was back home for 2 weeks, and then left my wife and newborn back and finished out the program and did demo day. We ultimately got funded, which I know we can dive into as well.
Yeah, I'm headed that direction. So a good segue here. You leave your sales role. It sounds like you didn't have much on the savings emergency fund aspect as far as what you wanted to put into that. I guess before I get too deep into the weeds with TrendKite, can you kind of give me the 20,000 foot elevator pitch, if you will?
So Meltwater was, in a lot of ways, like this Google Alerts on steroids. It was this database of articles and media contacts that you could use as a library. It used to be called a clipping service. In the 90s, that went digital, and Meltwater and a couple other companies came out of that on top. What I saw in the industry in 2012 was this transformation for more analytics and media measurement based. I guess the BI piece of it, Domo had probably just started around that time, but people were trying to make more informed decisions about their business, including around PR and marketing. We were hearing that from our customers. Meltwater didn't really have a dedicated solution to that. It had a statistics piece that was almost a bolt on, and it didn't work too well. So no one ever used it for reporting. Meanwhile, we had a $150,000 contract that had closed at that time with a really big enterprise, and it was all services, but we were doing it services ourselves. So felt like that there's an opportunity to explore that. And right out of the gates, we built a B2B team. So we took that idea. I was just doing what I knew, which was sales. And prior to us having a product, there's a lot of fake it before you make it. We'd find out what they want, and we'd reverse engineer the report, and we'd say, hey, our software did this. And they'd be like, really? Like, yeah. Let's do it.
Exactly what you asked for. This is it.
I know. Which it was. The deliverable was what they wanted. So that worked as an end result, even if it took us like weeks to put some of that stuff together, and we were being paid like pennies on the dollar of our time. But I mean, I learned really quickly that we're going to need to build a B2B machine to make this a thing. And we were going to have to outpace Meltwater because Meltwater was going to get competitive with us. We weren't at first, but ultimately a couple of years into it, we absolutely were. It unfortunately cost some relationships at that time that I'm thankful to say have post me leaving TrendKite, I've been able to link back up with some great people. And even to this day, there's actually strategic angels that are investors in QuotaPath that were from my Meltwater days, which is awesome.
Beautiful. Yeah. I was going to ask that. In fact, I may double down on it here in a second. So you start TrendKite and you're one of the co-founders. So you go from 0 employees to 250 employees, $0 to $225 million, right? So I think I read an average of 250% growth over a 4-year span. And so, I mean, you guys were really crushing.
Yeah, we were ultimately acquired for 225 by Cision last January. We went from 0 to 25 million in 4 years, 0 to 100 people in sales in that time as well. And I ran that team and it was fun. It was great. It was very new business focused, similar to Meltwater, because again, I didn't know what I didn't know. And we could keep that nugget for talking about QuotaPath down the line. But I know I had a fantastic team. It was really hard to explain culturally. And we definitely had a little bit of infamy around us in the Austin market. I say infamy because I think a lot of it was just like that we had rage hats. It felt that what is now known, I guess, is the bro culture. But I didn't look at it. I mean, I'm certainly don't feel a tie to that. I just felt that these were great people to work with that just like wanted to win. They would win no matter what, and they weren't going to lose. And just failure every single month was not going to be an option. And at scale, I mean, we hit 34 out of 36 monthly quotas for 3 years straight. You're just crushing it. And it wasn't like these quotas were set low. We continued to raise them. And some people were doing $150,000, $200,000 a month even. So the bar was continuously being raised. But the onboarding process and the ability for us to get to hiring great talented people and scaling them quickly that made us very successful.
How about personal growth? I mean, right out of college, you've got an economics major. So you've got that in the background. You've got that in your back pocket. Then you go into a sales role. I've been in a sales role for just over 4 years. You're in that sales role just over 5 years. And then you become a co-founder of a company that is just booming. I mean, just firing on all cylinders. There's obviously much more that goes into running a company than being a good sales guy, right? And I'm sure that benefits you in that, like you said, you're able to go to market with sort of a half-baked product and you're able to reverse engineer that and sort of maybe even spin your pitch as you're talking to them just because of your sales background. But how about with the other skill sets? I mean, the engineering aspects and the finance aspects and the marketing sides, and there's a sales ops, right? I mean, there's a lot that goes into that. I guess, one, did you take that yourself? And if so, were you taking classes or sort of improving your skill set, or did you surround yourself with folks that had that?
Yeah, so one, you do wear a lot of hats. I think technically we weren't going to, Matt, my co-founder and I that started the company, weren't ever going to touch it from an engineering standpoint and knew that didn't make sense. We wanted to understand it on the surface level. So we had a technical co-founder. Now, what I will say about this, because I go back to my own personal development, I mentioned my uncle at the beginning and saying I wanted to run a company. I wanted to be the CEO of a company. And ultimately, I actually was never the CEO of TrendKite. I was the president and all 4 or 5, almost 5 years. And that at the beginning was a really challenging experience for me. I didn't start the company to play second fiddle. That was my feeling at the time. I have since grown quite a bit. And there was a quote, Kobe Bryant was just obviously the events over the weekend were tragic and there's so many great anecdotes about him. But one that I heard in a video that was posted, someone asked him, like, can you give your advice on leadership? He said, don't lead, serve. And that stuck with me because it hit me really, really hard because I've learned that over time is that if you want to be a great leader, you have to serve. You bring on really talented people that you couldn't ever do their job in a million years. It would take you in a century to learn all the skill sets from them. But if you can serve them, you can enact their superpowers. And that's what we found a lot of times. We found really, really talented people that I was in awe quarter over quarter. So it wasn't just about the sales team. It was marketing, it was engineering, it was product, it was finance, it was HR. Every single piece of this thing was like a well-oiled machine. And so in some instances, I didn't have any control. It was just momentum taking force. But I felt really grateful, certainly by the end, the first couple of years of work that we put in and really just making sure that everyone felt well supported was the important piece of it.
Yeah. I didn't expect it, but you mentioned you couldn't be involved with the actual build, right? The software engineering or the behind the scenes aspect of this. I'm assuming that means you either hired a team or you outsourced it. I think a big question, at least that I've jotted down that I've been sort of working through is what does it take to get something like this off the ground, right? So I guess from manpower and financial standpoint, did you have to raise money? Did you have to use your own money? Just kind of help me understand where that comes from.
So for TrendKite, we didn't have anything. I had already mentioned that I was just trying to keep my family afloat. So we knew we were going to have to raise, and we just got really well plugged into the Austin scene. We would ask for advice from every single entrepreneur and investor, and just really were super hungry for everything that we could consume. And I think that resonated really well with some of the investors. So we ended up getting funded from a local venture capital firm called Silverton Partners in Austin, Texas, pretty well known in the state. And I think that was definitely a defining moment for the company because we changed into a real thing. Like now we have stakeholders and investors and a board. We can't fail. Before that, it was failing myself and like I'll pick up my ball and go somewhere else with it. But now we have real live people that are counting on us to do well. And so that was a really important piece of it. We were funded within 5 months of starting the company. In fact, it was just a month after we incorporated the company, March 2013. We got a term sheet in April of 2013. So we basically took a napkin idea, went through the accelerator. And I remember all of the managing partners of Dream It saying, no one's ever been funded during the accelerator. It won't happen. You had nothing when you started this thing. I like being told no. And we wanted optionality. So we weren't necessarily going to say we were going to have to raise, which we did have to, but we wanted optionality. So by the end of the program, we had a term sheet in hand and it felt good.
And I think you mentioned it there, but those guys, that was a startup program, or I'm sorry, an accelerator program that you guys were able to participate with?
Correct. Yeah. Dream It Ventures have had lots of notable companies. SeatGeek is one of them. Level Up out in Boston, which was acquired by Grubhub. So yeah, that was the accelerator out of Boston.
Yeah, I was going to say, it sounds like, just the perfect match for that sort of program, being that you're coming in with, I don't think I'm overstepping by saying, you lacked expertise, right? Co-founding a company right out of the gate coming from that sales role, lacked funding, lacked expertise, really lacked probably manpower. You're in the startup phase. It sounds like the perfect marriage for that sort of program.
Yeah, and it was. I look at accelerators today, and then you've had Amos on, and I think Techstars and what they're doing is fantastic. I was a lead mentor here in Philadelphia for a company that I'm now an investor in. So it's like very real in the sense that it helps you jump off, and basically what would take 12 months takes 3 months, but the support and focus that you get, advice all the way through. And a lot of times it's just about asking questions. So I think they do a good job of that. All Dream It was fantastic for us. I have nothing but great things to say. And I'm still really good friends with the founders and partners.
I was going to mention Amos just because I know in his book, which he was on, one of the first guests on, you had 2-3 pages out of that. Actually, I jotted down the page numbers, 132 to 135, where you talk about setting up comp plans, things like that. So, yeah, it was great. Sort of connecting the dots, man.
That was super fun to do. And his book's fantastic. I read it a couple of times, and he's really, really strong at customer development. If you're trying to figure out who your target customer is, go read his book.
Man, I could not agree more. I've echoed this several times on the podcast, but I attended his workshop here in Houston, and he and we didn't argue, but I got physically frustrated because he was drilling into, who's your who, and he was talking about my 9-to-5 sales role. And I've been there 4 years, and so I feel I know my customer pretty damn well. I'm answering his questions, and it's not specific enough. Give me more. We're trying to really corner a part of the market. Give me more. Get more specific. More. We're looking for one person. Who are you selling to? And I just couldn't give him enough information. And I left there with my tail tucked between my legs and had 2 copies of his book. Like, I'm gonna have you on the podcast.
I think at that point you just say people. I'm selling to people. Like that. You can leave it. I don't know what you want.
Yeah. Oh, yeah, man. In saying that, I totally agree. Book's incredible. If I could circle back to the product being built and you trying to fill the funnel really before it's even launched, my first question, how long does it take to get to sort of MVP, to get that first product to market?
Well, for TrendKite, it was a month. For QuotaPath, it's 2 years.
Okay.
Very, very different companies. We knew we had product market fit almost immediately just because we had such industry expertise, right? So we had a really strong understanding of who our target buyer was and what they looked like, and just the general sales methodology, objection handling, all the way through. So I don't think that it was less about focusing on product market fit and more about focusing on that pipeline and filling up that pipeline. We started to make traction early, but building the product, I mentioned we did faking it before you make it. You really do have to build a product, it turns out. So that took actually a good 12 months from March 2013, I'll call it, when we had that MVP for Dream In and people could play around with it, but we kind of hid some of the blemishes, to probably April of 2014. April of 2014 is when we actually started to scale. We had hired 3 salespeople, even directors. Like, I didn't actually want to do sales, dirty little secret there, because I didn't think it was beneath me, but I just didn't know what I didn't know. And I felt like, I want to learn operations or I want to learn product. That actually probably cost me personally 6 months of development time if I just had taken my own advice that I give everyone else. So April 2014, I had hired someone from Meltwater in San Diego who became my lieutenant. His name was Max Bergen. He's a VP of sales now. That's also the great thing. Out of like the first real 8 sales hires that we made, all became senior level managers or directors at TrendKite, and all have gone on to either be founders themselves or VP of sales. So the proof was in the pudding that we had there. But April 2014, we were at really 0 ARR. By December of 2014, we were 750,000 ARR.
Jesus. How did you find the company that built the product? This is your first swing at this, right? So the accelerator program points you in a direction to some folks that could help you build this. Did you find somebody on how do you go through that initial piece there? You have an idea. What's the next step?
Vetting a technical co-founder as a first-time entrepreneur was one of the hardest things I've ever done. Didn't know what I didn't know. We went to folks that didn't work out. We ultimately went with my co-founder's uncle, his cousin, family. He was advising us, and he was living in State College, Pennsylvania. And he was like, guys, I love what you're doing. I just want to come on board. And that was so exciting because that gave us validation. He moved down and went through the program with us, moved his family and 5 kids down to Texas from State College, and really helped us get off the ground. A year later, unfortunately, it didn't work out, and we parted ways under good terms, but he and his family were not Texans, it turns out. So that was unfortunate, but by that time we had gotten enough traction that we started just to make our own name for ourselves, and we brought on a VP of engineering.
And as you're onboarding customers, this first wave, I guess I'm going to kind of pull from Amos here, is that first wave of customers, are you charging them for using your platform, or are you using them for feedback? What did that sort of maybe beta phase or first launch look like?
Yeah, we were all heads down in sales. And I wish I maybe had read Amos's book on development, because we were just trying to sell the product and get people to buy it. We didn't bother about pilot programs. We certainly discounted and we're trying to figure out our pricing and packaging at that time. But we really were just focused on getting them to sign a contract. I think that was good and helped us out and really define who our customer was. We weren't afraid to ask for the business like lots of founders could possibly be. And we were fearless. We knew what we knew. We were really confident about the industry and the product that we were selling, even if it didn't work all the time. But we really just wanted to create a repeatable sales methodology. So we started documenting that out. And we eventually had a couple of clients that were like, you know what? I've used it. I see it. I need to see if this works. I'm going to pilot it. So those became our first. We immediately switched to annual contracts in May of 2014 when we started hiring sales reps so that we would have consistent sales methodology.
That annual reoccurring model, I mean, you guys were somewhat ahead of your time, huh? I mean, I feel the subscription model has just began to sort of surface. I say just, maybe in the last year or two. You guys were doing an annual reoccurring model back then. I feel you were somewhat ahead of the curve.
Yeah, I would say we were slightly. I think I got lucky because at the end of Meltwater, we were still doing bookings. It wasn't thought of as AR, but it was a recurring subscription model. There was a town hall like the week before I left where the CEO came on and he goes, so we're going to institute this thing called annual recurring revenue. I'm not really sure. I don't understand it, but investors tell me it's important. And I was like,
I like it.
Yeah, that was it. His people, his company, like, I don't know what this thing is, but we're going to try it out for this $200 million company. I knew that was a thing. And then because we were funded so early, like we had to start to understand our revenue model and our financial model, more importantly, and that tie-in. And because I was the sales leader, it was a very easy bridge for me to make sure our contracts had the right terms, thought about them the right way. So I could speak at the board level about it, but I could also make sure that our guys, our team, and the sales team knew what they were selling and how it was being sold.
Yeah, that makes sense. You mentioned being that first time entrepreneur role, very new. It's one of the most difficult things you've done. At what point does it get easier for you? I mean, you're hiring folks, you bring on an accelerator program, you've got a little funding. At least in my mind, not being the founder or entrepreneur, I visualize you hiring some folks and things start to become a little automated, right? You've got folks that are a little bit smarter than you, a little bit of lead flow, some folks in marketing, maybe a sales guy. At some point, does it get a little easier?
I used to ask myself that question every single day, and it never, ever got easier. It was always different problems. Yeah, I hired great people that were really, really intelligent and talented, but I mentioned earlier to lead is to serve. So when you have a 150 person team, every single day you feel like you're serving up something. And so it always went back to more of a one-on-one and kind of the mental coaching that went through with my sales managers. I mean, it started with the individual reps, but then it went to the sales managers and moved up from there.
If I could fast forward just a bit, talk to me about the actual sell of TrendKite. How does an opportunity like that come along? Were you guys actively in the market looking to sell TrendKite? Had someone reached out and said, listen, this is what we're looking for. We need to pick this up. How does that come along? And I guess even a big question, how much did you guys end up selling it for?
Yeah, so we didn't have an inbound funnel. So there was no like someone coming along saying, think about my media measurement today.
Yeah.
So it was always about the kind of the outbound model and the messaging around it. We knew that the director of communications or PR was one potentially readily available. If you think about that role, they're always taking media calls. Their contact info is at the bottom of press releases. So our target buyer and persona, cold calls actually worked. I was very happy. This was a time where people were very negative on cold calls and saying cold calls are dead, blah, blah, blah. And it was like, it's working for us. I don't know what's wrong with you, team. But it was really more fortunate that we were dealing with the right type of buyer that was okay to take cold calls. So we'd make maybe 100 calls. We'd have 11 pickups. Out of those 11 pickups, we could probably set 5 demos. Out of those 5 demos, 4 would show up. Out of those 4, 2 would become qualified. Out of those 2, 1 would close. So we had conversions measured all the way. Sales cycle was 36 days. Our average deal size was about $12,500 to start. Our first quota was $25,000, so you need to sell 2 deals in 1 month. And then we just had messaging all the way around. And each individual person, I used a tool called Insight Squared. I was a very early adopter to it, both on the sales side and for them as a company because they weren't so old. But just basically I said, I'm not dealing with any of the Salesforce reporting because it's just like not my thing. I'm not interested right now. If I can get an out-of-the-box solution that gives me a lot of like the demo to close ratio, or just like pipeline management and how we thought about conversions, that was great. And so I lived in that app for probably the better part of 3 years as I understood people. And I could tie their individual metrics to their own motivations and bridge that gap. That felt good because it felt like an unlocking mechanism of someone saying, hey, I want to sell 200%. Well, let's figure out actually how you need to sell 200% before you make this declaration.
Yeah, sort of reverse engineering or going back through. Yeah. How about the actual exit of TrendKite? How does that opportunity come about?
So this ties back to me personally. I just had told you and built up this story that we moved my family down to Austin. What I didn't say is I had told my wife before I went down that there was no way in hell I was moving to Austin, Texas. And so at the end, when we got funding and the directive was, hey, we'll fund you, but you have to move the company to Austin, it became like And do you know that thing I said about not moving to Texas? About a couple of years there. First off, my wife is an amazing support and really, really good about it. She knew the deal and she said, look, I'll do 2 to 3 years. And we stayed 5. So on year 5, though, she was pregnant with twins in Texas heat. Our daughters were due in September. And so you can imagine that she was like, nope, I'm done.
Yeah, about July timeframe.
Yeah, so we moved in July of 2017, and exactly right. And meanwhile, I was still running a big team. I was running the biggest team at TrendKite, so I had to commute for 8 months every single week, back and forth, which was a little tiring. We made it work, and I was really, really, happy that we made that work. But I ultimately knew that I couldn't stay long term in the role. but I also knew that I wanted to get back to something a little bit smaller. So scale team at that point, we had raised $47 million in 5 different funding rounds, 9, I think, on the management team, 7 on the board. And I knew I could probably step back. I had fully vested all of my equity. It's always a question. Hey, you sold TrendKite, but you weren't there day to day. Did you lose everything? Like, no, that's not how that works. So I was fully vested and knew I had a good opportunity to kind of part ways and hand it off. I stayed really plugged in. I was thankful my co-founder stayed with the business through the sale, and he and I were super close and still are super close. So it was a really easy conduit every single day to understand like how things were moving in the business. And it was 7 months prior to the actual date, which was January 24th. So last week was the 1-year anniversary of the sale. January 24th, 7 months prior, we had gotten a letter of intention from Cision to buy the company.
That's awesome. This is something I've wondered for years, and I thought about this last night. When a buyout like that happens, I mean, I even think somewhat silly, but I even think about this process happening on something like Shark Tank, where they come in and just buy the company, right? Once that happens, can you talk to me about what that process actually looks like? I mean, do they write a check for $225 million and send it over, or do you distribute that amongst leaders and shareholders? Just kind of talk to me about that.
It's a public company, so a lot of this is readily available. So I'm happy to talk freely on some of these things. So when a public company buys you, there's usually a cash equity component. I mean, first off, any deal can look differently. There could be all equity deal, all cash deal. But for them, they made it 60-40. So they gave 60% cash, 40% equity. I think that's how it kind of tied it. It was a little interesting at the end because there's like a lot of rules and regulations with the SEC. I was on the 60-40. Some folks actually got bought out completely right off the bat. So those are all negotiation points. I wasn't an executive at the time, so you have to think that there's a lot of like bonuses and opportunities and earnouts that happen with these type of deals. To not be specific about the Cision TrendKite deal, but that's just generally how it happens. And so I was kind of on the sidelines through post that signing. And my co-founder, again, being the conduit, gave me some heads up on it. So I learned a little bit on like what to expect maybe down the road on some of that stuff, just by virtue of listening and taking in what he had to say. So it was helpful.
Got it. And I'm going to ask and maybe repeat the same question here of, you have a second opportunity to sort of stash away some cash at that point, right? And this is a lump sum. If I can maybe start to pivot a second and you have the opportunity to you open up a second business, right? Or you start a second business with QuotaPath. So I guess before I get too deep there, can you maybe talk a bit about QuotaPath?
Yeah, and I founded QuotaPath immediately right after leaving TrendKite. So TrendKite hadn't actually even been bought yet when I started. But I knew regardless of that, I was going to start another one. QuotaPath takes a lot of what I learned as a sales leader, and I wanted to bring it to the masses. And what do I mean by that? So sales commission tracking on the high level is what we do, but it's really way more than that. I wanted to build a tool that was freely available for individual contributors that they could use and help understand how they were making money, tracking goals, that engagement ring. How many deals would it take for it to close? Or maybe I'm saving up to buy a house or a trip to Bali, whatever the case may be. So we have one part, mint.com, that we call MyPath, which is like a portfolio for sales reps on understanding their career earnings and tracking it. And that will eventually be portable. They can take that from job to job if they want to. The other side of it just connects to their CRM. We started with Salesforce and pulls in the deals and overlays their compensation plans. And you can forecast how much you're going to make. What if I close these 3 deals? Does that take me to the next tier? And it's just a really easy way to be able to track that. So we released that version in August. Today, we're working with a handful of customers on the paid side, more admin control level on the B2B part of the product on tying the commissions all the way up to payroll. But we wanted this bottom-up type of funnel. It's called lovingly product-led growth, or PLG. OpenView, a firm out of Boston, is doing a really good job of branding PLG and PLG companies. You can think of Slack or Dropbox, but there's now, in fact, out of like the tech companies that went public in the last year, I think 10 out of 12 were considered PLG companies, Zoom, Datadog being another one. So really, really love the movement. It just takes a lot of adherence to product and proactive. So I mentioned month 1, we were selling TrendKite, and 2 years into the business, it's more having customer conversations. We had 700 conversations with individual sellers last year to really tie in and get their feedback on how this would help them.
Congratulations, by the way, on, I think the initial interview we had booked here 2 days before that, you guys had gone to market or launched maybe some capabilities around MyPath. And so it sounds like that it's firing on all cylinders.
I get this daily text or feedback or screenshots of Slack messages of people like discovering and then at the end saying, I love this. And
Nice.
That is awesome to see that. It happens every single day now. And I can tell you, we didn't get a lot of that at TrendKite. So my reason for building the business is to make this just platform that people love to use.
Yeah. If I could circle back to the funding question of, were you able to take some of the funds you pulled from the TrendKite exit and put this over into the QuotaPath sort of inception? Did you go back to an accelerator program? Kind of help me understand the funding of this. Did you follow the same process, or now that you knew the ropes, did you take this yourself?
Yeah, so TrendKite hadn't sold, but will tell you, like an entrepreneur journey, there's opportunities to sell a little portion of their own shares along the way called secondary. And we did take a lot. I mean, I bought an airplane. Anyway, I told all my investors that, well, maybe Ange and I will stay in Austin, we'll probably buy a house in secondary. And that maybe that's why we should sell some shares. Like, oh, okay, just staying there. And then like 2 months later, I bought an airplane and we're like, what the hell?
Yeah, it's not a house.
Yeah, I bought a house in Pennsylvania. But they were really gracious about it. And in some instances, I've actually flown to Houston, picked up board members and flown them to Austin for the board meeting. And I've done that with QuotaPath now. You mentioned the Amos workshop. My really good friend, John Reale, JR, who's in Houston, ran Station Houston for years. He's a board observer for QuotaPath, and we had a great dinner in Austin, flew him back. But anyway, to answer your question about QuotaPath and self-funding, I was a little bit unsure. I knew that being a second-time entrepreneur would give me some level of credibility, so I sent out an email to about 200 people that were in my network saying, hey, I'm going to do something. I don't know what it is. I want you to join my journey. Are you in? And I got $800,000 committed within a week.
Wow. With no idea. It sounds like you didn't even have an idea. I'm going to do something, but I don't know yet.
I mean, I knew that I wanted to do a business model that's unique. I will say, though, that I had a slight knowing this. My co-founder for QuotaPath was the director of revenue ops at TrendKite, and he had dealt with pain in bringing on an enterprise-level tool. And 8 months later, we weren't onboarded, and we paid $50,000 for this tool. And so we knew there was a real pain there. But I knew I wanted to do something a little bit different. I didn't want to just build an incentive compensation management platform. Like, that sounds awful. So thinking about it differently. But yeah, I didn't really have the idea yet. And I certainly didn't let on that I had anything other than just going to do this full time. Here we go. But I got a call from a VC in Austin, ATX Venture Partners. Chris Schonk was a partner there. I didn't work with him. He said, AJ, I heard you're doing something. This email got forwarded my way. I know the story of TrendKite. I know your background. I would love to work with you. And I said, Chris, I just came from 47 million venture. I left a boardroom where there were 23 people in it. I know how this gets. I'm not interested in venture right now. I will be. And I worked with some great firms, Silverton included. So I didn't necessarily think that I wasn't going to do it. But at that time, it's just too close to the vest. I'm either going to self-fund this or I'm going to do something with a couple of angels. And he said, why don't we just come in and meet? And it was a hilarious conversation. He knew the space actually really, really well. One of his companies had previously exited to Microsoft. And so he was really interested in getting back into it. And he was just like, look, let me just send you a term sheet. You don't have to do anything with it. Chris, I don't know. Okay. So he did. And he was true to his word. He sent me a term sheet. And I let it sit for a week. We had lots of conversations. And I said, you know what? This guy's going to make a bet on me on a conversation. He's someone that I want to work with. And it's been 2 years. And I've had a great relationship with ATX Venture Partners. I have a great relationship with all my investors, mainly because I learned a lot on what board dynamics and how to lean in on your board. So I write a weekly report, I write quarterly insights, we engage with our investors. I have about 20 strategic VP of sales leaders, angels, that I'm going to call on, whether it's from HubSpot, from Twilio, from Dropbox, like all the sales leaders that when we go to paid, I kind of want to call on them to say, hey, let's make this happen with your firm, but also spread the word.
Check that out. And that's really interesting. And you've really surrounded yourself with, that's a hell of an ecosystem as well, right? So when you hit this button and you guys are full go, you've got a hell of a support system structure around you as well. I'm really curious on the path or the journey you took with TrendKite is incredible. And you go from zero to hero. You reset at QuotaPath. I'm assuming that we've put a lot of makeup on the TrendKite journey and that you had to hit some lulls or some troughs, right? And some highs. And I'm assuming you made several mistakes that you had to sort of go back and soothe. You're having the opportunity to do this again, right? You're getting a second chance at this. Not that the first one wasn't successful, but you're getting the chance to run through this again. What things have you done differently, or that maybe you've carried to this, or things that you've said, no way, we're implementing this here?
There's three key things that I think about. One on its own is the mission, vision, and values of the company. I think that was a mistake. Matt and I, my co-founder at TrendKite, didn't really concretely set that. And we brought on a CEO when we got to our Series B, Eric Huddleston, who really operationalized the business and did a good job of that. But culturally, there was some misalignment, and that just happens when founders bring on CEOs. Eric did a good job of making sure that we thought about the business in the right way. I think we didn't have full alignment on like what we thought it was going to become, but we kind of just continued to kick the kid down the road because things were going so well. Ultimately, that misalignment definitely surfaced when the company came to scale, and that's when it didn't feel like our company anymore in a lot of ways. So that was one thing I wanted to set, and I set those. We've set those at QuotaPath, and we continue to visit them and think about them as well. Number two is retention and customer retention. I already talked about loving customer advocates. The industry that I was in, the PR measurement industry, didn't have a lot of what we call stickiness. So there might be one person at a company that would be using the tool. And if they left the company, then you're kind of floating out in nowhere world. But even then, it still was a little tough. So we worked with great companies like Nike or Hershey's to help them measure their PR. But it was always this challenge of keeping customers happy because we were selling so fast. And the third thing, which I learned at the end, was just the importance of financial modeling and like headcount planning. There was definitely a downward pressure for me to hire faster on sales, and I didn't want to do it. I knew I didn't want to do it. I knew what it was going to do to the team. And I'm sure you've gone through this as well with like lead flow and thinking about inbounds and territories and all that stuff. And it can be a challenge. And so when you have 150 hungry mouths to feed, that can be even more of a challenge. And so that X equals Y dollars, it's just like dialing for dollars, is not a real thing. And I kind of cringe when investors say that, because it's like they think they have the science of sales figured out, but they certainly don't have the art of sales figured out. I loved bridging the gap between those two, but I realized that like that, I just couldn't. And that's when I raised my hand and said, hey, I don't want to be the sales leader here anymore. This isn't the model that I think that I can be successful in. And that's okay. I was fine with that.
Yeah. I've got two other questions for you, and I know we're pressing up on time. Early on, I had asked you about your savings sort of strategy and portfolio right out of college as you were getting ready to build TrendKite or get ready to launch TrendKite. Obviously, lots of maturity. Several years later, you're two businesses deep. Do you have a different savings and investment strategy now to where money that you're pulling in, you own an airplane, it sounds like 2 homes maybe. Do you look at real estate? Do you max out your retirement accounts every year? Kind of help me understand that the total investment portfolio, if you will.
I mean, I think one of the things, and we talked about Tony Robbins at the beginning, like from a financial standpoint, like what's a success or what does milestones look like for me now? It's financial freedom. That if I decide tomorrow that I no longer want to be the leader of QuotaPath, then I have the financial means to do so. That said, I love what I do, and I couldn't see myself doing anything else. I love the team that I work with and the product. But financial freedom really resonated well with me, and I feel like I have that. My wife is an entrepreneur as well. She owns a drop-in daycare, drop-in child center where you can drop your kids off at flexible times, run errands. And it's really cool to see her flourish and take off, but we can obviously self-fund that as well. I did end up buying a second airplane. I bought a 2-engine airplane. I got my commercial pilot's license over the summer. So I definitely have those type of freedoms that I certainly didn't ever imagine. But the other part of it is, and this is one thing in Philadelphia that I'm trying to really work on, is the ecosystem and investing back into the ecosystem. I've invested in about 12 startups personally. They're not huge checks. I'm not the biggest investor, and I'm by no means a billionaire or anywhere near that. But I really think it's great to follow the journey of younger folks or younger in their career, younger as founders. And I've invested in them and helped where I can from an advice standpoint. And I've done that in Philly and in Austin and a couple in LA. But those are only 3 cities that I've done it. And I just want to make sure that that's clear, because you look at like Austin and they definitely have a return to capital and a reinvestment in the city. And Philly is still really emerging with that. So that's something I'm really happy to be able to do. And I serve on the Philly Startup Leaders Board as well and mentor a few different startups.
Jesus, how do you have the bandwidth? Do you have a financial planner or a wealth coach or something that helps you navigate the ropes here?
Yeah, and I'm going to give a shout out to him because he's fantastic. Jared Horan in Austin, Prosper Wealth. And Jared and I have been friends for years. He's very much in the entrepreneur ecosystem. When TrendKite was just starting, I talked to him, and he wasn't trying to sell it himself. We actually talked a lot about Tony Robbins, and he's been to countless workshops with Tony and events. And when it became more and more clear that this was going the direction it was going, he was like, you know what, you should think about it. It wasn't about the traditional means, whether it was like the diversification of securities or whatever. He just like is really good with kind of a cash flow management and thinking about all the ins and outs that we have and opportunities that pop up. Really good, just even buying our house and thinking about how, a pledged asset loan could help in our situation. So I talk to him weekly. I owe him a call, so this is a good reminder. Yeah, you can call me for a week. So
y'all have a weekly cadence. Is that what I heard?
We text every day. It's not for everyone. I think a lot of people can manage their own wealth, and that's totally great, or their own stuff. It's really good to keep me structured and focused. I can be really bad about that in my personal life. And my wife is my fantastic COO at the house, and I need another COO, I guess, from the wealth management standpoint.
Man, I'm going to end this, I guess, a little bit different than my traditional way, just because your story's it's had my wheels turning for a couple of weeks. You had the chance to, I'm going to say, you had a successful exit, and most folks, most in this millennial realm, talk about achieving, I think you just talked about it, achieving this FIRE, right? This financial independence or retiring early. And I would say you were knocking at that door, right? And you mentioned as soon as I left TrendKite, I was spinning up QuotaPath. So you didn't even take a second to marinate in it. I'm really interested. I'm really curious as to what keeps your wheels turning, right? You mentioned your wife just spun up a business. So you guys are still just pedal to the metal. Do you have a number in mind, a plane count in mind? Do you have something in mind that when I get here, I'm done? Or what's driving you right now?
Yeah. And so a couple of years ago, I absolutely did that have a plane in mind. It's a PC-12, but that's regardless. And then I got sick. I got really, really sick. So I know we only have a couple minutes left. I was in the hospital for the better part of 6 weeks. I had a really bad allergic reaction with antibiotic, and it manifested in really bad ways. And it brought me back down to earth. And so I covered my white space. There's no white space left in my life. However, I still very much stay grounded. My wife and I work out at 5:30 in the morning. I think about health all the time. And that I keep kind of personal. On the success standpoint, I always think about, it's not a what's next, but there's a greater good. I look at today's world, and there's so much turmoil, and social media has not helped this in the slightest way, but there's a real opportunity to do some greater good in the world. I think this is a good stepping stone for me on learning and development with QuotaPath and doing it some good for the sales community, but taking a step up from there. And whether it's thinking about climate change or the political climate, I definitely know that I want to get into more of that, step into that world a little bit. I have no idea what that idea looks like, but it will happen. And I think it will happen just post QuotaPath, whenever that might be.
Yeah, I believe it will. I know it will. AJ, man, that's all the time we have, brother. This has hit, just exceeded every expectation I had. I've been antsy about this thing for 3 or 4 weeks.
Glad we kept pushing it off then and kept the build up a little bit better for it.
Yeah, brother. Yeah, I'm really, really grateful. For the folks that want to maybe connect with you, follow your journey, maybe have the chance to talk with you at some point, how can they reach you, contact you, follow you?
Yeah, QuotaPath.com is my company, and I'm very accessible on LinkedIn. Write me a personal note, not something that we'll just throw away, and I will absolutely respond, because that's the best way to give me a contact. AJ Bruno 3 is my moniker.
Yeah, that's how I found you. Personal note and LinkedIn. If you are in sales, obviously give the application QuotaPath a look. For the folks that, I guess, AJ, again, man, I appreciate your time. For the folks that are tuning in and listening, I really appreciate your time. As always, I'll take any feedback, suggestions, anything of that nature. And as always, stay on your grind. What an incredible story, right? The ability to go from virtually no experience. You're a sales guy, right? So you're sharpening up the communication skills and the ability to negotiate. And there are definitely skills there. But going from the sales guy to the co-founder or founder of a business that scales from 0 to 100 people and 0 to $225 million, that is just incredible. I love to hear sort of the minor goals, right? Set a ring. You wanted to buy a ring, go grind for that. Wanted to buy an airplane, go grind for that. The ability to sort of make these small goals out there and then pivot his way and achieve those goals. I loved that. even more so, it's rare that someone's willing to bet big on themselves, right? People are always looking for the best way to become rich quick or make the next dollar, but it's so rare that someone's willing to put their money where their mouth is and bet on themselves. And the fact that he was willing to move his family, pull out his 401k because he knew he was onto something, it just speaks volumes about who this man is. And obviously it worked out. I really, really appreciate him slowing things down and walking through what does that acquisition process look like when a company comes in and buys you out? What does that purchase and sort of slow acquisition and really rolling you out of that role, what does that look like, right? I thought that was really, really interesting. And then even more so, the ability to sort of pivot, reverse engineer, come up with the minimum viable product and put that into the market in just a few months, right? QuotaPath, it took 2 years. There's just so much out there. I really, really appreciate AJ coming on, giving us some of the kick-ass info that he brought to the table. Even more so, as always, I appreciate you as the listeners. If there's any feedback, comments, questions, concerns, people I should be looking to interview, things that you want me to talk about, please reach out. It's info@rhodestowealth.com. I've got tons out on the social media as well. You can find me there. I'm behind all of it, so please reach out. Look forward to your feedback. That's all I have for this week. Appreciate your ears. Stay on your grind.
So smooth. You know what I'm saying? Q1 made the beat, by the way, just to let y'all know what's going on. Tell them, it's the road to the wealth, yeah. I do it for health, yeah. It's the road to the wealth, yeah. With my kids and my spouse, yeah. It's the road to the wealth. I do it for health, yeah. With my kids and my spouse, yeah. I'm financially sound, it's the road to the wealth, yeah. I do it for health, yeah. With my kids and my spouse, yeah. I'm financially sound. If life about purpose, it give you something to seek in. I've been setting cash goals, financially speaking. I've been finding blessings through all of these demons. I pray to God, I give you something to reach with. Say I give you something to leave with. This life about goals and achievements. Your eyes on the prize, they hate out your mind and pray to whatever beliefs in. Teach on the way, know that the reach on the way. Gotta shine hard in the teacher's water. Know that little seed, they gon' grow them off. So every day gotta come with us. So they give you something to stand on. Make the false off when you land raw. Make you put some new friends on. It's the road to the wealth. I do it for health, yeah. With my kids and my spouse, yeah. I'm financially sound. It's the road to the wealth, yeah. I do it for health, yeah. With my kids and my spouse, yeah. I'm financially sound.